Hello, how are you feeling today? 2023 already came, and do you want to start to make online money? I have good and bad news for you. Open your note and listen carefully. If you want to know how to make money with investment, crypto and last updates in finance and stocks market, you can subscribe my channel. If you like video, don't forget to click like button and write comment. Investors are ready to leave this year's dismal market performance in 2022. Investors around the world are racking their brains to determine where the market will go in 2023. Now that inflation has finally started to decline, the economy is facing a challenge. How much of a hit will this year's aggressive interest rate increases by the Federal Reserve have on it? In 2023, will there be a recession? How severe will that recession be, if at all? Will the rate of unemployment soon soar? What effects will the Fed's balance sheet unwind have on the markets? Or have worries been exaggerated, and the Fed is about to engineer a soft landing for the economy where inflation keeps falling and unemployment only slightly increases? There are three possible outcomes for the market in 2023, the best case scenario, the worst case scenario. How much bad could it get? Similar to how they would forecast the price of a single stock, investors and analysts predict the future value of the S&P 500, a benchmark index for the larger market. They attempt to calculate the aggregate earnings per share, EPS, of all the S&P 500 companies before determining a trading multiple based on those earnings. For instance, as of earlier this month, the median EPS price target for the S&P 500 in 2023 was $232.53. The S&P 500 trades at roughly 20 times earnings right now, which is within the normal range. The S&P 500 should trade at 4,650 next year if this EPS consensus holds true, which would be great given the current situation. Many experts, including analysts at Barclays, believe that forward EPS estimates like $232.53 and even multiples are currently overly optimistic. In October, Venu Krishna, the head of U.S. equity strategy at Barclays, said, "In conclusion, whether there is a recession or not, we believe that earnings estimates are still too high. Simply put, a recession will speed up the revision cycle and bring us closer to the trough. We believe that the next leg of stock market decline will likely be fueled by disappointing earnings, the base case." Morgan Stanley analysts predicted that the market would end the year at about 3,900, which is roughly where it is now, about a month ago. Morgan Stanley, however, anticipates a challenging journey. The bank's analysts have lowered their EPS projections for the S&P 500 to $195 for the following year, which brings them to 3,900 if they use a 20x earnings multiple. However, analysts predict that a difficult earnings year will shock markets in the first half of 2023, sending the S&P 500 into the low 3,000s. The team, however, believes that 2024 will be a significantly better year for earnings, allowing investors to turn around just in time to drive the market back to 3,900. As a result, they see a dull endpoint but a lot of volatility and excitement in the interim. As things stand right now, even though the environment is still very uncertain, given the current state of affairs, I do not anticipate another great recession next year. Many consumers are starting from a position of strength when you consider the robust labor market, where consumer loan losses are at compared to where they were prior to the pandemic, and their savings, though there are undoubtedly some segments of the population whose savings have started to decline quickly. Furthermore, compared to a decade ago, the housing market appears to be in much better shape. I currently anticipate a slowdown in consumer spending and further price stabilization, which could harm profits. Although a severe recession would be better for the economy, I wouldn't anticipate one, which is a double-edged sword because it might not prompt the Fed to lower interest rates or produce enough earnings growth to push the S&P 500 lower. I am currently following Morgan Stanley's prediction that the S&P 500 will most likely end next year at current levels and perhaps even sneak into the 4,000s because of this. Something big just happened. It can be beneficial to pay attention when our analyst team offers a tip for investing. After all, the Motley Fool Stock Advisor newsletter, which they have been publishing for more than 10 years, has tripled the market. They recently revealed their list of the top 10 investments for investors right now. The history of their stock picks also demonstrates that, while timing isn't everything, it pays to invest in their best ideas at the beginning. So, basically we have to be ready for all cases. But I believe that, in all cases, we can make money. If you want to know how to make money with investment, crypto and last updates in finance and stocks market, you can subscribe my channel. If you like video, don't forget to click like button and write comment. Thanks for watching. Have a good investment.